for our website. So again, thank you very much. I do appreciate the feedback. The purpose mainly of today's webinar is to apply it to our website. But again, if anyone does have any questions, don't hesitate to ask. There is a tax chat, or there's a chat box bottom left hand corner. If you have any questions, please don't hesitate to ask. If for whatever reason you don't wish to ask it during the webinar, please don't hesitate to contact us with what's on the whiteboard at this time. I've got our phone number, email address. I also have my own personal contact information listed there as well. So again, don't hesitate to call us if you have any questions. I'll mention this multiple times during the webinar, but I'd rather you folks contact Tiernan and Associates and not even be our client than to contact somebody that lives down the road who may think they have infinite tax knowledge where in reality they really don't. So I'd really rather you contact us, again, even if you are a client of ours. Again, my name is Jody Tiernan. I am from Tiernan and Associates. I am coming to you from Union, Ohio. And the purpose of today's chat webinar is to talk to you about not only a few of those things that you need to keep track of with Mary Kay. There's actually quite a few things you have to keep track of, but there's no way that I could go over all of that within an hour's time. So what I'm going to do is I'm going to hit the high points, what I think is imperative for everyone in Mary Kay that they need to keep track of. Whether you're a branded consultant or you're international, been in this for 30 years, you are definitely going to need to account for certain things. I'm going to address those, but in addition to that, I'm also going to talk about those items that I believe are recruiting tips, things that I think that you could try and help recruit people with regarding taxes. It's an item that most people really don't consider when trying to recruit. There's a lot of advantages of being Mary Kay, of course, the money, the prizes, the automobiles and such, but also look at it from the tax point of view. If I get involved in Mary Kay, then these are the tax advantages of being a Mary Kay. So definitely another aspect to consider when trying to recruit somebody. A little bit about Tiernan and Associates. The business has been around for over 30 years, something I'm very proud of. My father began the business in 1980. It all began basically when I was in grade school. My grade school teacher at the time was not only a teacher, but she was also a director of Mary Kay. And ever since then, the business has grown. We travel from coast to coast doing seminars, and Mary Kay is our niche. We've done exceptionally well with Mary Kay, and over all those years we processed a lot of tax returns, processed a lot of information, and because of all of that, because of all of our background, because of all of our experience with a lot of folks for many years, we've gotten a lot of education from one specific. When you think of taxes, you got to think of the IRS. We've had a lot of experience with the IRS over all those years, processing a lot of returns. You're going to, of course, have to deal with the IRS. We've learned a lot from those folks, and based on that, we know exactly how the IRS wants it in the form that they want it in. So the information I'm going to provide to you today is not just simply based on what I've read in books, classes I've taken over all these years, but it's actual IRS experience specific to Mary Kay consultants and directors. So again, a lot of experience specific to Mary Kay and exactly how the IRS wants it. So that's about Tiernan and Associates, a little bit about me. My father retired in 2006. I took the business over from him in 2006. And I have been doing this now for over 20 years, which I'm actually quite fond of. I enjoy what I do. I believe that I help people. I believe that I help people make the tax law a little less confusing and at the same time making sure that they're aware of what's going on in their tax life and trying to get them the best amount in tax savings that's legally possible. So I do enjoy what I do. I've been doing it for a very long time, and I think I really do try to help people. So, without any further ado, we'll go ahead and get involved in those items that I think that are imperative, that, again, whether you're a brand new consultant or been doing this for a long time, these that's listed on the whiteboard are 5 things that you need to make sure that you keep track of. The first one being is all these items, first of all, are all Section 1 items that's taken off the shelf, not including sales. So the first one that you want to keep track of is just personal use. You gotta have personal use. The next item that I want you to also account for is hostess gifts, credits. The third one that you need to keep and you need to account for is gifts of Section 1. With gifts of Section 1, there's going to be a limitation to this, however, of $25 per person per year. It's a caveat that I have to list. However, of all the years that we've been doing this, it's never been an issue. It's never been a problem, except for those folks who have a tendency to give away the store. Now, normally who would we consider we have a tendency to give away the store to? Mothers, sisters, close relatives, friends. The issue here is that if you have a good client, maybe you give a little bit more than $25. But as long as you don't give away the store, it's not going to be an issue. So if you give $80 or $90 to somebody, that's not going to be a problem. However, if you have a tendency, again, to give away a large amount of product to that one person, that's going to be a problem. So don't really fret about how much you give if it's more than 25, but just don't give away the store to that 1 or 2 person. The third item, or excuse me, the fourth item there is demos. Demos, samples, testers, whatever you want to refer to them as, you need to make sure you keep track of those. Then the last item that I list there is donated items. Donated. Those items that you end up giving for charitable organizations. And for those people, it is not limited if you donate to charitable organizations, such as church, battered women, things of that nature. However, what if you have an item that is so old that you end up having to, it may have a bit of an odor, or it may have things growing on it. What do you do for those folks? You gift it to a funeral home. You say that may seem a little tacky, but never throw away product. Never throw away product. Throwing away the product basically has no value. You will get the value for the product, but my point is that if at least you donate it to a charitable organization, if you gift it to a funeral home, you may end up getting business out of this. Again, it sounds a little silly, but it is possible. It's better than throwing away the product. Never throw away the product. So again, those are donated items. If you donate an item, what you want to make sure is that you keep a list of the items that were donated and letterhead from that company, that organization that you donated the product to, and just keep that with a list of items that you donated with the wholesale amount. For each one of those items, you need to make sure that you have a list of what was in each specific category, and you need to make sure that you have the wholesale value associated with each one. So the item and the wholesale amount, this is my opinion as to how you account for this stuff. How do you record it? You just simply write it down. Just simply write it down. On a line sheet of paper would be fine. Again, the name of the item and the wholesale amount. You need a sheet for each one of those items. Now, if you wish to use software program, that's fine. However, you got to be aware of the fact that what you put in, please make sure that it's correct, so the information that it spits out will be correct. Ultimately, you are responsible for what comes out of that software, so please make sure that's being done correctly. Just an important point. Simply put, I'm an old school. I just simply write it down, but it's whatever you're comfortable with. Those are the 5 things that you need to keep track of. Those are the 5 things when it comes to inventory, Section 1 items. The next area I'm going to hit on is, on December 31st, everybody in Mary Kay should have done what? What should they have done on December 31st? They should have kept track of their inventory. Now, living in the world that I do, I realize that quite a few folks didn't do that on December 31st. So what I ask for you to do is at least do this for me. Now, the IRS is going to tell you should have done your inventory. Mary Kay is going to tell you should have done your inventory, and I have to tell you should have done your inventory. But again, living in the world that I do, for a lot of folks they didn't. So all that I ask for you to do, and it's better than doing nothing, is to at least estimate what you think you have. At least estimate what you think you have. Wholesale or retail, I want to know what you bought it for. I want to know the wholesale amount. So again, if you didn't do it on December 31st, at least estimate what you think you have on that specific date. You have to have something. Now, one of the biggest advantages of dealing with Tiernan's is that we help you with your ending inventory number. Because really, who cares about your ending inventory? Most people in Mary Kay don't care about their ending inventory, but who does? Internal Revenue Service. Those are the only people who really care about your ending inventory. Now, because they care so much, we actually really do need to care about it. So, ending inventory is a huge deal, though, when it comes to the IRS, because it helps determine how much money you actually make per item that you sell. So if you have 2 extremes, if you have a bad ending inventory number, this is if you have a bad, incorrect inventory number, then you could be telling the IRS that on one extreme you make 70% on every item that you sell, and we know that's not possible for you to make 70%. Not possible. How much could you possibly make per every item that you sell? No more than 50%. However, for most of us, we make less than 50%. We only may make 45%, 46%, 44% due to the discounting and gifts and such that we give. So how is it possible that we're telling the IRS 70% bad ending inventory number? What's the opposite extreme of that? Where you're telling the IRS you may make -% on every item that you sell. How is that possible? It's not possible at all. That would be as if you were to, for every item that you sell, you collect no money and then give them $1 to take away the product, and we know that's not possible either. So, 2 extremes, making 70%, I'm just making that number up, of course, and then the opposite extreme is where you're making -%. You're giving people money to take away your product. Either extreme is not possible at all. However, we've seen it in many times. We've seen it multiple times where people have either done their own return or they go to another person who has no knowledge of Mary Kay, and they end up with numbers that can't possibly be correct on the return. And do we really want to tell the IRS that you're making -% Of course not. That's not possible at all to have -% in Mary Kay. So, with Tiernan's, if we look at your ending inventory number and we believe it to be incorrect, we will make sure that you are aware of that. How can you have an incorrect inventory amount? Maybe you've got product on that shelf that Mary Kay gave to you. You don't want to include that as part of your inventory because you never purchased it. Or maybe for whatever reason you can't locate all of your inventory. Maybe some is in the car, or some's at a friend's house or a relative's house. Maybe you just didn't count it all. So those are very two easy examples of where your ending inventory number could be wrong. And again, it isn't that it's imperative to be exact, but we got to get it in the ballpark. And the simple reason is because of the IRS. So we help you with your ending inventory number. If we believe it's wrong, we'll contact you and we'll try to work with you to make sure that we get it correct. Very important. Huge advantage of dealing with Terrans. If you do this on your own, chances are you may not be able to recognize it, and then the individual that's local to you that does taxes, chances are that person's not going to recognize it either. So we're here to help you with that. Huge advantage of dealing with us. Next thing I'll talk about is income. Income. Two types of income. You've got sales, you got commissions. We're all familiar with that. But when it comes to your income, the issue here is if you get in-kind commissions, prizes, awards from Mary Kay, there's a very good chance you may end up with receiving a 1099 miscellaneous. So if you get a 1099 miscellaneous from Mary Kay, it's imperative that you file. Because not only do you get a copy of the 1099, but Mary Kay Corporation has also sent one to the IRS. So it's imperative that you file this. So then that begs the question, who has to file in Mary Kay? Who has to file a tax return in Mary Kay? And that's that person who buys a product and sells it then for more than what they purchased the product for. So if you buy a Section 1 item product for $5, you sell it for $10, then you have to file. A lot of people will ask, well, what if I only sold $100? What if I only sold $400 or $600? The dollar amount has no importance. What's imperative is the fact that if you bought it for $5 and you sold it for more than $5, you have to file. So the first thing is that the IRS is going to tell you have to file. But the second reason which you to file is that if you tell your spouse, if you're married, that you are in a business, you're going to your weekly meetings, you're delivering product, you're going to a career conference, you're doing all these activities, you're putting all this time and effort into your business, but then when it comes to time to file your return, you don't file a return, how may your spouse react to this? If you say that you're in a business and yet you don't file it on your return, then you don't have a business. So from your spouse's perspective, why are you doing all this? Why are you driving, going to meetings, putting all this effort and time into it again, and you have no business? So my point with the spouse is that to justify to the spouse that you are in business, you file it with your personal return. The third reason in which to file is that if you wish to purchase or refinance your home and you tell the bank you're doing well in Mary Kay, but if you don't file your Mary Kay, again, you do not have a business. So the bank really doesn't care what you tell them. If it's not on your return, it's not a business. And then the fourth reason in which to file, the first one being the IRS is going to tell you to file if you sell above wholesale. The second reason is that your spouse is going to wonder why you don't file if you supposedly have a business. And the third reason is the bank, if you buy or refinance your home, they're going to want your Mary Kay to help you with that refinance or purchase of a home. And then the fourth reason, what is most common with a lot of folks is, in any business, in the first 2 years especially, on paper, you typically end up showing a loss. Your expenses are greater than your income on paper, and as a result, that loss reduces the family income, which reduces the family tax, which in turn means typically get a larger refund. So those are the four reasons in which to file Mary Kay. Those are the four reasons. The next area I want to talk about is, no matter what size business that you're in, quite typically, the worst aspect of any business is the paperwork that's involved. There's two extremes when it comes to anybody when they're self-employed, and this definitely is evident in Mary Kay. Two extremes. One extreme is what? Doing nothing. Or as I was recently suggested, just burn everything. Well, you don't want to burn everything, and you got to do something. So that's one extreme. What's the opposite extreme of doing nothing? Doing too much. What I refer to as charts or graphs. You put too much time to the bookkeeping. You put too much time into the paperwork when in reality you should be doing what? You should be selling or recruiting. So what we have on the whiteboard now is something that is friendly, and it's very much in the middle. You've got to do something. Just mention that, but at the same time you don't want to spend too much time where you're losing money. So what we have on the whiteboard right now is what we call our expandable file. But inside the expandable file, there's over 20 different categories, 20 different separate files. Each one of those files represent a different category for your business. What you do is that you just simply keep this expandable file that you see on the whiteboard, you keep it in your car. And then for every place that you go, you end up with a receipt, and for each one of those receipts, you put it in that specific category. So if you try to recruit somebody at a local restaurant, you put that receipt under the meals category. If you end up sending a postage, whether it's from UPS or USPS, you put it under office expense, that receipt. If you go to a supply store, office supply store, you get a receipt, you put it under supplies. All the filing you do is throughout the year. So there is no shoebox involved. There's no wondering where's this receipt or where's that receipt. It's already for you. All that you have to do is put those receipts in the individual categories throughout the year. And then at the end of the year, this is a very important part, very important point, is that at the end of the year you simply take an adding machine with a tape, add up the receipts, and that's exactly how the IRS wants it. You attach each one of those calculator tapes to that stack of receipts, and there's your bookkeeping. That's all you have to do. That is all that you need to do. Now, a lot of people may want to do the charts or graphs, and if you're that type of person, more power to you. But this is all the IRS wants. This is exactly how they want it. They want it per the category, and for each category they want it added up. And that is all. It's just that simple. That expandable file is $15 plus shipping and handling. It's extremely reasonable, folks. Extremely simple. Not much time and not a lot of effort goes into this. But there's enough effort for the IRS. And again, the only reason that we're here is for the IRS. So keep that in mind. It's very simple, very straightforward. Included in that expandable file, there's a cheat sheet in there that lists all those different things that you could have for your Mary Kay business and exactly where they go. So it's also included in that. So again, it's $15 plus shipping and handling. Very economical. A lot of folks say, well, I'll just go and make that on my own. And chances are you won't. You're probably not going to do it. Ours is already done for you. Just call our office, email us, ask that you want one, and we'll be more than happy to send one to you. Very simple. Not costly at all. Next area that I want to discuss, or before I go on, when it comes to your bookkeeping, or we can do it. As a consultant, it's less than $1 a day. Less than $1 a day. As a director, it's less than 50 cents a day for a consultant and less than $1 a day for a director. It's $180 for a consultant, $360 for a director. And what we ask you to do is every month you send us your receipts specific to your business. I don't need receipts for groceries and things of that nature. But if there are specific business receipts, I ask to see those. credit card statements for your business, cell phone, internet bills, things of that nature. You send it to us on a monthly basis, and then every quarter we will may ask for more information. And then if we have it, then we'll provide you a profit and loss statement every quarter. We also evaluate if estimated payments need to be done. We do that automatically with your bookkeeping. We'll look at your entire family return and determine whether if you need to make estimated payments. And maybe those estimated payments may not be because of Mary Kay. Maybe it is because of retirement, maybe part of your Social Security. But we look at it as a whole, and then we'll determine whether estimated payments are necessary for either the federal, state, or local governments in which you live. So again, it's $180 for the bookkeeping as a consultant, $360 a year for a director, 100% deductible, extremely, extremely economical to do, very economical. Next area I want to discuss is car and truck. Car and truck. The chances of you folks ever getting audited are highly unlikely. However, if they were to evaluate your business return, if they were to audit your Mary Kay, basically, they would take 3 or 4 different categories, and they would want evidence to support those numbers. Well, quite typically, of those 3 or 4 numbers, your mileage is going to be one of them. So, how do you do the mileage? You need the date, where you went, and how many miles. The date, where you went, and how many miles. And it's important that you get all of this. It's very important. It's because each one of those business miles that you drive is worth money to you. And depending on how much money you make and where you live, you could end up with quite a few dollars in an expense for mileage. And it's because of that number being so high that quite often the IRS will ask you about that. Again, chances are unlikely that you're audited, but if you are, they will want to see that mileage number. And again, the reason is because it's typically a very large number on your return. Huge advantage of dealing with Tiernan's, again, is this area. Just like your ending inventory, it has a huge impact on your return. And it's something that the IRS evaluates often. Just like your mileage. What we're trying to do is we're evaluating the reasonableness of both your ending inventory and of your mileage. That is what you are paying for with Tiernan's. Evaluating whether it's reasonable based on, when it comes to your mileage, 2 pieces. I just mentioned those. Income and where you live. We always evaluate those 2 things when it comes to your mileage because depending upon those 2 items will help determine whether your mileage is reasonable. The 2 examples I love to give when it comes to your mileage is a person living in Chicago versus a person that lives in Billings, Montana. But what are the differences between those 2 places? Lots. The only thing they have in common basically is that it's in this country. But the biggest difference is the population. Let's take that person in Chicago. Is it possible for them to make $1,000 and maybe drive 1,000 miles to make that $1,000? Absolutely. No problem there, believing that at all. But let's take that same person living in Billings. Is it possible for that person to drive 3,000 or 4,000 miles to make that same $1,000? Absolutely, especially in the first year or 2. So we look at how much you make and where you live to determine whether your mileage is reasonable. And that's something that unless you have a lot of experience in doing, you really can't judge. Again, that's what you're paying Tiernan's for, because we look at that all the time. As a quick example, just recently, we filed a 2012 return, and every time that we file a return, we need to see the prior year's return. A client sent us her return for 2011, first year in business, she did it, and she told the IRS that she had $90 in income, which, if you get in late in the year, of course, we all know that's possible. But she had $90 in income, but to make that $90, she drove almost 16,000 miles. Now, folks, that's not reasonable at all, is it? Consider this for a moment. Made $90 and drove 16,000 miles, and that is what she told the IRS. She told the IRS on the return she drove almost 16,000 miles. And we all know that's just impossible. It's not reasonable at all. That return would have never left my office. We warned the client of the issue for 2011. Now, whether she amends it or not, that's at her discretion, but we did warn her of this. That's just not reasonable to drive that many miles. Now, that again would have never left our office because it was not reasonable. It's not reasonable to drive that many miles with such a small amount of income. Again, huge advantage of dealing with us. We're always going to evaluate your mileage. Huge deal. Next area I want to talk about is what I consider a huge recruiting tool. And that is those items over $100 that we would purchase for our business. And quite typically, what is that? That is technology items, furniture items that we use specific to our office, and things of that nature. My father's addressed for years, and I still address them, are what he considers two exotic items. Two things that normally you could not write off on your return. The first one being is a very nice piece of furniture that you could put your product on. And this is basically the only item that you're going to use as 100% for your business. What would that be? What could you put in your home that could be used as 100% for your business? And that's a piece of furniture that you would display your product on. 100%. Now, you could go to a very economical store and get a shelving unit that may end up falling over if a nice breeze goes through it, which would be not good. Or you could go to a nice furniture store and spend maybe a nice small sum of money on one. But the money that you spend on that piece of furniture is 100% deductible, and you can have it the rest of your life. But because you are now in Mary Kay, you can write that off. And like he suggested for years, where do you want to put this nice piece of furniture? He has suggested, as I do, you put it up by the front door. So people come in, they see the product, then they see the nice piece of furniture, and you tell them now you can afford this because you are in Mary Kay. Huge recruiting tool. Huge recruiting tool. Next item that he spoke of for years as an exotic item is TVs. A television set. Can a television be deductible for a person in Mary Kay? Absolutely. How can a TV be deductible? Education, recruiting purposes. There's no way you could have ever written a TV off because of your W-2 job. Another huge advantage of being in this business, not that it only tries to recruit her, but typically it helps recruit him as well. So if you haven't already realized, part of the recruiting process is recruiting him and her. And typically a lot of men like large televisions in their home, and it does help with recruiting when you tell that spouse, I can write some of this off on my tax return. We can't get carried away with the percentage, however. Maybe we're only going to write off 4 or 5 or 6%. But nonetheless, is that better than no percent? Could you have ever written off a TV before? Absolutely not. But again, because you are in Mary Kay, you can now write this off. So take that into consideration when it comes to recruiting. I think it's huge. I think it's huge. So those are two of more exotic, like I mentioned before. What's typical? Handheld devices, cell phones, printers, things of that nature. Now, one important thing to remember, and one thing that I've learned with dealing with the IRS for as long as I have, is the fact that a lot of people want to consider they want to write off 100% of their phone, or 100% of their iPad, or 100% of whatever it is that they're using. But think about that for a moment. Is it possible that you use your phone 100% for Mary Kay? Or your iPad 100% of the time for Mary Kay? Absolutely not. It's not possible at all. So what is possible? I've learned with my experience with the IRS that a lot of times the taxpayers will want to say 90%, 100%. What does the IRS would say? Maybe 50 or 60%. So what I suggest is, as a result of my experience with the IRS, not an IRS pub, not any type of magazine article, but based on my experience with the IRS, nothing more than 70%. Nothing more than 70% is normal for usage. Now, it can be less than 70%, but not more than 70%. Again, trying to convince the IRS that your cell phone is 100%, that's not possible, because the IRS realizes you're going to have friends and family that call you, and it can't possibly be 100%. So keep that in mind. Keep that in mind. Another advantage of dealing with Tiernans is that we always evaluate what you are appreciating. Sometimes folks want to write off, and I'm not joking, sometimes they want to write off their bedroom furniture. And of course, that's not reasonable again. So we, again, look at what you're depreciating. The bottom line here is we do not want you to have issues with the IRS. We want no issues. So what, again, you're paying us for is determine what is reasonable with your return. Very important there. So that is depreciation. Things that cost more than $100 that you can have for your business and that you can write off. Just want to be careful with how much of it that you write off. And much like with your mileage, we always determine what is reasonable, like I just mentioned. But how do we determine what is reasonable? Bedroom furniture, again, good example, it's not your business. So we determine what the item is, but in addition to that, we also look at how much money you make. How much income do you have? The more money you make, the harder that you work in your business, the more effort you put into it, the more things you can have. Have that be your own incentive to do well in this business. The ladies go to leadership and they see the cars that they could win. Absolutely, that's an incentive for them to do well. Same thing for the technology items that you get at a supply store or at Apple or wherever. You look at those items and you have to think about, if I make a lot of money, I can have that. And that's how you have to look at it as. In the past, we've written off boats and cabins. In Mary Kay, those people that wrote off the boat and the cabin, well, they were both nationals. They were doing very well in their business. And they were using those for recruiting tools. Same thing goes for you folks. As a brand new consultant, of course, you're not going to write off a boat or a cabin. But you can have the small stuff to begin, and the more money you make, the more things you can have. Just like in Mary Kay, you start off with no car, then you get the Cruise, and then you get the Equinox, and just revealed with the BMW. So the more money you make, the nicer car you can have, the more stuff you can have. Use the same type of incentive to help you grow. Just like the Mary Kay car, same thing with technology. So wonderful incentive. Wonderful incentive. The next area I want to talk about is Tiernan and Associates. I've already given you benefits of dealing with Tiernans. We help you identify any inventory issues. We help identify any automobile issues. We'll help you with also with the depreciation of items, things that cost more than $100. But above and beyond that, we truly want you folks to do well in your business. My father spoke for many years about how you never know enough people. You never know enough people. And the same goes today. Nothing has changed. But the more people that you know, the more people I end up knowing. And the more people you know and the more people that I know, the more money that both of us make. So I want you to do well. I want to do everything within my power for your business to succeed and to grow. Because the more you grow, the more money you make, the more that I grow and the more money that I make. And I'm going to do everything that I can in my power to make sure that you're happy with our service and that you understand what's going on. The gentleman down the block, he may only have 1 or 2 Mary Kay people, so there's no incentive for him to do that like what we're going to do. And in addition to that, nobody knows your business tax-wise better than Tiernan and Associates. Again, just because of all the years that we've been doing it, for the thousands of returns that we've prepared over the 30 years. So, no one knows your business as well as what we do. And the thing is that you never have to explain any of this to us. Where if you go to the individual that's down the block, franchise, whatever it may be, and if they're not familiar with Mary Kay, and you have to bring a sack lunch because you're going to be there a long time to explain to them your business, and then when you're done explaining them to the business, chances are they're not going to really still understand. And if they don't understand, are they going to be positive or negative about your business? The last thing you ever want to hear your spouse here or your recruit's spouse here from an accountant, a tax preparer, an EA, CPA, whomever, is to ask the question, why are you in this business? Because you are just going to lose money. The chances of it are, if they hear this, they're not going to be in this business. Probably even come by the end of that day, they're not going to be in Mary Kay. You're never going to hear that from anyone at Tiernan's, and the reason is because we know you folks can make money. We've got clients who do exceptionally well in this business. So we understand the money can be made, and we understand your business, so we're always going to be positive about your business. And sometimes the spouses need that, right? Well, we're here to help them understand what Mary Kay is, how taxes interact with that. So if you've got a client, or a prospective recruit, I should say, that has questions about being a Mary Kay, or her spouse has questions about being a Mary Kay, have them contact us. We're going to try to recruit them as much as you are going to try to recruit them, because again, this is money to you, and this is a possible recruit for me. I work the same thing that you folks do. So you can never know enough people, and we're going to go out of our way to make sure that you're happy with our service and you understand what's going on. Very important. Costs. How much do we cost? Well, it depends upon whether you live in a taxing state or not. If you do not live in a taxing state, what the amounts that I'm going to tell you are going to include your W-2 income, your spouse's W-2 income, and all your normal tax stuff that you have every year. If you have mortgage interest on your home, property taxes on your home, contributions, kids, child care, things of that nature. All your normal stuff, including Mary Kay. On average, anywhere from $180 to $220 for all of the above. Now, if you live in a state that has an income tax, add another $20 or $30 to that. Now, that's going to be more than the do-it-yourself tax software programs. But with the do-it-yourself tax software programs, like that example I gave you earlier with the young lady who had put $90 income and drove almost 16,000 miles, well, on the do-it-yourself tax software programs, you can do that. You can get a lot of money back. But the problem is you may have issues with the IRS. Again, with Tiernan's, we want no issues with the IRS. We want to make sure you get the best bang for your buck. But at the same time, we're not going to tell the IRS you drove 16,000 miles to make $90. We're not going to tell them that either. So, is there going to be more than the do-it-yourself tax refund programs? Absolutely. But at the same time, it will be done correct. It will be done correct. And we're always going to evaluate the reasonableness. That's what you're paying us to do. Because if you do this on your own, chances are you're not going to be able to identify it, and you're going to spend a lot of hours doing it. And if you have a spouse that insists on doing it, do you really want to discuss with your spouse your Mary Kay business? I would suggest that you don't. And the reason is that may lead to marital issues. And we don't want that with our Mary Kay. So, am I suggesting that you keep secrets from them? Absolutely. Maybe a little. Maybe just a little. It's your business. It's your responsibility. So, it is in your hands to make sure that it's filed correctly. I just don't suggest the spouse doing it, because if he's doing it, he's not going to be familiar with how to do it correctly, and then that's when the questions may start coming, and that may end up being frustration in the end. So, do I recommend that? Absolutely not. So how do you deal with Tiernans? How do you deal with Tiernans? We ask you to purchase this organizer. As you can see on the whiteboard, it says 2012. We are currently sending out the 2013s right now. What we ask is you fill this booklet out to the best of your ability. The first half of the organizer, we ask you personal tax questions. Then the second half, we ask you specifically about your Mary Kay. Total Section 1 purchases, total sales, and all the expenses that you folks may have. ProPay, for example. Section 2, internet costs, things of that nature. We ask you to give us the totals. Then 7 to 10 days, we should have contacted you back with the results of the return. If it takes longer than that, we've got questions, then we should have emailed or called you regarding those questions within those 7 to 10 days. We're very economical, and we're very user-friendly in that the fact that if you have any questions while filling out the organizer, please do not hesitate to call or email us. We'll be more than happy to help you with that. Especially if you're a first-time consultant, don't hesitate to contact us. We're used to that. Please contact us if you have any questions. So once you purchase that organizer, we give you a username and password. You go to our website. Again, you fill the booklet out to the best of your ability, and then you send it to us whenever you have all that information complete. Anytime after February 1st, when you get your W-2s, your bank statements that you need, when you get all that stuff, when you have the booklet filled out to the best of your ability, you mail, you fax, email us the information to us. Anytime, like I mentioned, after February 1st, once you got everything, and once you've got the organizer completed. And that's how you work with Tiernans, even though you may not live anywhere near Ohio. We deal with people throughout the entire country. I think last year we dealt with about 3 or 4 states. So we're familiar with all the different states. If you're a partner resident in multiple states, we take care of those. We've been taking care of those for years. If you're a partner for one state and for another state, if you're in the military, again, that's not a problem for us whatsoever. Get an organizer, fill it out to the best of your ability. You include the rest of your tax information. Mail, fax it, email it to us. We'll get it taken care of for you. And again, any questions, don't hesitate to call us. A couple of other things I want to hit on before I leave you today is, what about cell phone and what about the internet? Can we write off our cell phone and the internet? When it comes to the cell phone, we're going to need your cell phone bill. And then we're going to need to identify whose cell phone number is whose. How can we identify if that cell phone number is your cell phone number, or your spouse, or your children, your business card? So based on your business card, the phone number on that, we're going to be able to take a percentage of your cell phone bill. So based on what I just said, do you want to be a secondary or the primary person on that bill? I would suggest primary, so you get more per month, of course. And based on your income will then help determine how much of a percentage you can take. No more than 70% though. So what you do is you take 70% of just your cell phone bill. Just your cell phone bill. Not the full family, not the family as a whole, but just your portion. So what about the internet? Now with the internet, we all have the bundle. We got home phone, long distance, all this stuff on there. We have our cable bill. We have our special channels that we pay for. I don't need to know any of that. I do need to know, however, is how much your internet is. Whether that's $49.95 or $55.95, whatever it is, we'll need to pull just that part out of that bundled bill. And then how much do we use as a percentage? Again, no more than 70%. Remember also, folks, that if every dollar that you try to write off, please remember that you need a receipt for that. You say, I don't get a receipt for my cell phone bill. I don't get a receipt for my internet, but you do. You at least get an electronic receipt, and you need to make sure that you have that receipt. Even if you don't print it, that's fine. That's not a problem. But just make sure you have access for it to be printed at some time in the future. A lot of people are asking about, what if I just take a picture of a receipt with my phone? Not a problem. The two issues with that: please make sure that you have backed it up. And the second thing is make sure it's able to be printed. Because worst case scenario, and the chances are highly unlikely you're ever audited, but if you are, the IRS does not take digital information. All paper form. So you've got to make sure that it's in paper. So again, you can save it electronically, but make sure it's backed up and make sure you can print it. Next thing I want to talk about is, huge recruiting tool in my eyes, is the ability to hire your children, grandchildren, grandchildren. This is not the neighbor's kids, this isn't your cousin, this is strictly your children and your grandchildren. What it is, you establish a pay rate based on their age, and like I mentioned before, don't suggest that your 5-year-old's worth $30 an hour. Based on their age, you come up with a per hourly rate, and then in addition to that, you create an itinerary of what they're going to do. So if they're 5 years old, which is possible, nothing wrong with a 5-year-old, maybe they seal up envelopes and things of that nature, then maybe they're only worth 80 cents an hour or something of that effect. So you establish a pay rate, you establish an itinerary, and then what you do is that you pay them out of your Mary Kay account, and you have it deposited in their savings or checking account. So there's a paper trail here. Very easy to see it. And then what do you do with the money that goes into their savings or checking account? It doesn't matter. I suggest that you fund their college with it. Some type of 529 plan, but whatever you wish, it does not matter. But it's an easy deduction for you. Very simple deduction. Now they have to be under age 18 and pay no more than $599. With that, you never have to worry about filing any paperwork with the IRS, and it's not going to be taxable to the kids. So it's a wonderful deduction for you. Again, children, grandchildren under the age of 18, create a pay rate based on their age, itinerary, pay them once a month out of your Mary Kay account and into their checking and savings. It's a wonderful deduction. It's very simple. But just remember a couple things. No children, grandchildren only and nothing more than $5.99. But just as important is, depends upon how much you make. If you only make $100 in 1 year, please do not suggest that your kids were worth $599. That's not possible either. So it's got to be reasonable. It's got to be reasonable. And you say, well, I don't have any children or grandchildren. What do I care? Remember, recruiting. Huge recruiting tool here. Another huge recruiting tool is Office in the Home. I'm not going to go into that very much, but it's a wonderful deduction, and the reason it's a wonderful deduction is whether you are in business or not, you're going to still have to pay to heat it, to cool it, to insure it, and to repair it. And now, because you are in Mary Kay, you can write those items off. So it's a wonderful, wonderful deduction. Because again, you are in business, you can take those items that you're going to have to spend no matter what. Now you can write those off on your return. The next area I want to hit on real briefly is how to take a business trip instead of a vacation. Huge recruiting tool here, folks. To take a business trip, you have to have the intent to do business before you do business. So what you do is you create an invitation. Let's say that you live somewhere up north and you want to go south in the winter months. So what you do is you email an invitation to a friend that lives south. She then in turn sends this invitation to 15 people, and 7 show up. And of those 7 people that show up, they have this invitation, and on the invitation they're going to have a good time. They're going to enjoy themselves, and they're going to look beautiful, of course. And of those 7 people that received the invitation, that showed up, you've got to do now what? For it to be a business trip, you've got to do what? You've got to sell. You've got to sell product, and what's even more important than selling product, and that is recruiting. Why would you rather recruit than sell? Because if you recruit somebody, it must mean you got to go back. You got to educate them. And as long as that person is making money for you, you can do that. It's a beautiful thing. And now, because you've made the money, at least $50 a day, recruited a person per week, you got to do something. Those are numbers that Tyrion's created, but it's a number that you have to at least have. You got to do something while you're there. But now that you've made the money, now you can take the flight, the meals, the hotel stay. It's a beautiful thing because it makes your job fun. It makes it interesting. When Mary Kay was alive, she suggested you recruit in 5 different places. And the same thing goes for you folks. Recruit in 5 different places. It's deductible and it's fun. And again, it's a huge recruiting tool, because could you just go up to your W-2 job and your employer and say, I want to go to South Florida in the month of January? They're not going to go for that. But because you are in Mary Kay, you're self-paid, there you go. But the important thing is this: you have to have the income to justify the deduction. Huge, huge point. It's got to be reasonable. Those are the points that I want to make for today's webinar. There are many other things that folks need to be aware of, but what I've given for you today are some things you need to keep track of. And again, a lot of recruiting tips. How to get people interested in Mary Kay other than the money and the cars. There's also a huge amount of tax benefits here as well. Lots of tax benefits. Again, my name is Jody Tyrion. If you've got any questions, please don't hesitate to call or email us. That is my company information. This is my own specific information. Again, if you wish to work with us, what we ask you to do is to purchase our organizer. It's $5. Contact our office. Fill the organizer out to the best of your ability. You get it to us anytime after February 1st with the rest of your important tax information. You get it to us, and we'll get it back to you within 7 to 10 days. If not, within those 7 to 10 days, we should have called or emailed you asking for more information. We're very efficient, and we're here to help you do extremely well in your business. Again, any questions, don't hesitate to call or email us. I'd like to thank you for visiting today. And again, we're here. One thing I did not mention, we are here throughout the year. So if you've got any other questions in the months of July, August, September, we're here to take those questions. We do more than just Mary Kay. If you have a relative that's passed and now you're left with $40,000 and you ask, how's this going to impact me on my return? We'll be more than happy to help you with that throughout the entire year. I've got a full-time staff here throughout the year. This is all that we do. We're not roofers. We're not into securities. Tax prep is all that we do, and we do it throughout the entire year. Again, any more questions? If we didn't answer them, please don't hesitate to call or email us. Again, I'd like to thank you for visiting today, and thank you very much. Bye now.